Okay. By the way, a lot of these come down to what they call the balance sheet equation. Assets equal. Oops. Oh, that's not right. So a lot of these are using this, if you know this, for a lot of these, it'll kind of get you pretty far. Okay, so let's go through these, and if you have any questions, you know what I should do? I won't do it today, but let me make a note of it. There is a way to do a polling in Zoom. And that's what I should be doing with these. Because then you guys could all answer, what you think the answer is, and then we can go through them. That would be the better way of doing it. But I'll leave that improvement for the next exam. Okay. So this is Chapter 2 practice exam. Again, if you didn't get it in your email, if you check in Blackboard, it is under the course files. Okay. Collection of accounts receivable. What does it do? What do we collect?
Cash.
Cash went up. And what else happened?
Account receivable go down, right?
Absolutely. Yep. That's it. I'm going to abbreviate accounts receivable just to save a little time. No, it didn't go up. What am I doing? So cash went up and accounts receivable went down. So which one is it? A, B, C, or D? I tell you, we can put it. You can put it in the chat too. Oh, it is in chat. Let's pull up chat. Oh, no, the chat is something different.
B.
Nope. Cash is an asset.
Yeah.
Accounts receivable is an asset.
Oh, so it's A.
Yeah. Yep. I know it's weird the way it's written because it looks like it's reversing the first one, but actually it is. I should underline that. And bold it. And everyone really knows that's the answer. Okay. Yeah, it increases an asset. The asset is cash. And then it decreases an asset. The asset's accounts receivable. I'm going to copy this. And by the way, when you're taking the test, if you don't, the spacing doesn't have to be the same. So if you do your calculations or whatever, you can leave them in there. It doesn't like what I'm doing here. That's fine. Don't worry about it. And if the spacing gets messed up later, who cares? I mean, I can figure it out. Okay. If an individual asset increased, okay. So if there's something went up here, then, well, these two sides have to equal, right? So, these two are together. So A, there could be a decrease in specific liability. Well, then it's not going to balance. If this, for example, let's put a number in here. Let's say this side goes up by $10. This is, just for kicks. Now, the liability goes down, it's not going to balance. You can't have one side up by 10 and the other side down by something. So which one is it probably going to be on here? You know, the possibilities are what? That a liability goes up, or equity goes up, or I should put numbers in there, that an asset, like we have in the first case, an asset goes down, right? That was stupid. You know, if it has to balance, you know, oops, no, that's not it. So these are kind of the possibilities. Ooh, that's not. I'm giving you the impossibilities just to let you know that. I'm not going ahead. So these are kind of the response. You know, these are the. This would be an or. So these are possibilities. If assets go up by 10, liabilities could go up by 10. Equity go by 10. It could be some combination of those two too. Or assets could go down by 10. Because, you know, to balance, you know, these are kind of the what could happen, the what ifs. So which is the answer? If assets go up by 10, we could have assets go down by 10, liabilities go up by 10, and equity go up by 10. You know, those would all make this still equal. Does this make sense? I mean, you know, that if this let's see, it is, well, let's take a look here. The individual asset went up, then an equal decrease in liability. No, liability would have to go up to make this equal. An equal decrease in stockholders' equity. No, if assets go up, then equity must go up. These two sides have to equal. There could be an equal decrease in another asset. This one would work. So it's actually going to be C. You know, so it actually it's like this up here. If cash goes up and accounts receivable goes down. So these two are possible. Oh, that's right. Oh, I know what's wrong here. Yeah, so this is the so these two didn't happen. Those two, they said both decrease. So, you know, notice what would happen if this went up by 10, down by 10, you know, the net impact would be 0, right? So it'd still be in balance. You wouldn't have to change the liabilities or the equity. It's similar to this up here. You know, whatever the cash collected was, you know, it went up, the accounts receivable went down, the net impact is 0. So these two don't really have anything to do with it. Okay. And by the way, the multiple choice questions are the hardest, just in case you're wondering. They always are. For some reason, as soon as I was like, oh, multiple choice questions, they're the hardest ones. Because they're not the normal doing it. You know, they're not. Increase the size a little bit. Okay. Purchase of an asset on account. Well, let's think about what's going to happen. So we purchased it on account. So do we pay any cash for it?
Yes.
Actually not.
Would it be accounts payable then?
Yes, exactly. So assets would be going up. We purchased an asset, so the assets are going up. And then the liabilities, and here's the tricky part, are the liabilities going up or down?
Up.
Up. Yep, good. So what's the answer? So assets increase and liabilities increase.
So it'd be B, increase assets and liabilities.
Yep, perfect. Yeah, the asset's going to go up with whatever the asset you're purchasing, and your liabilities are going up. In other words, you owe more people. You owe them now for whatever the price of this is. Hey, what's going on here? How come this isn't? Hold on, give me 1 second here. All right, number 4, payment of a liability. What are we going to pay with?
Cash.
Yep. So is cash going up or down?
Down.
Cash is going down. We paid the liability. So are the liabilities going up or down? Do we owe more or less now?
We owe less.
Less. Good. Yeah, liabilities are the tough one. The one that's hard to think about, but this is absolutely right. Okay, so what's going to be the answer?
D.
Yep. And yeah, you guys, you can put the answers in the chat. I can pull up the chat here. Yeah, so this is decreasing. This one's decreasing. What am I doing here? That's something weird with the spacing on this. Okay, 5, paid a dividend. This one's a kooky one. It's a kooky one because of the way the book shows dividends being paid out. I don't have any problem with the way they show it, but it makes this one a little hard. Let's do the easy part. What did they pay the dividends with?
Cash.
So cash is an asset, it's going down. And now, this is going to end up in the equity section because it's going to come out of retained earnings in the equity section. Now, just to keep this thing in balance, forget about anything we know about the statement of retained earnings and all that kind of stuff. To make this thing balanced, if the assets go down, what's going to happen to the equity? These
It has to go down because they need a balance.
Exactly. Yep. Yeah, this has to decrease, right? If this side decreases, then something, and nothing else happens over here, then something over here has to. In this case, it's the equity section. So the equity section will be going down. it's a little bit confusing because dividends is it's an account that a type of account we haven't talked about. It's called a contra account. It goes against the equity section. So it goes against retained earnings. Anyway, long story short, it comes out of retained earnings, so it will go down. Oh, which one is it? I'm sorry. So is it A, B, C, or D? And you can do it in. Yep. So it decreases assets. And stockholders' equity, so they both go down. Yeah, these are tough. And by the way, one of the reasons why we're doing this, in my past life, I would give these on the test, and people would do not very well, and then we would talk about them, and people would do very well. So it's like, okay, we're going to do the multiple choice questions first. Some of these will end up on the test, some of them won't, or one similar to it. So anyway, that's.
Can I see number 5 again?
Yes. So that's the reason why we're doing it now. And you learn more. I mean, you learn more if you kind of go reason through them and do them ahead of time. You can think about them rather than doing it on a test where you're unsure.
Okay, I got it. Thank you.
All right. Courtney Company purchased equipment for $1,800 cash. As a result of this event, equity decreased, assets increased, total assets remain unchanged, both assets and equity decreased. Okay. Well, what happened? They purchased equipment with cash. So what accounts are we working with?
Assets. So it's going to be cash and equipment.
Yep. So let's see here. Oops. Oh, no, it's not. Okay, I'll do it here. So cash. Did cash go up or down?
Down.
Down, yep. And equipment?
Up.
So which one's the answer?
C.
Yeah. Yeah, an asset went up, an asset went down, so there'd be actually no change in the assets. There wouldn't be any change in any of these either, in total. I mean, in these accounts, cash would be 1,800 less and equipment would be 1,800 more. But in total, the total of the assets, whatever they are, it'd be the same. I am going to go through this and fix this spacing here. Okay. Debit to an asset account indicates an error. It could be an error if you did it incorrectly. But this actually goes down to this. If you used to look at this thing, a debit to an asset means what? A debit is an increase. Oh, I thought I had it in as a. I don't. I can't do anything to it. All right. So let's go back up to our problem. All right. So debit to an asset, and again, if you just look at that table, debit asset. What does it mean? It means an asset increase. Oops. Eight. Debits. Increase both assets and liabilities. No. Well, let's go back down to our table. So debits will. Okay. Debits will increase assets and decrease liabilities and decrease equity. So assets are pluses for assets, they're minuses for liabilities and equity. So let's go back up. Increase both, no. Debits. So the increase assets. So which one is it?
It would be C.
Yep. Yeah, increase assets, decrease liabilities. And so, you know, the connotation is that, you know, you can't really say that they're pluses or minuses. It depends on what kind of account they are. This one, you unless you had it in a different class, you'd have no chance of knowing this one because I didn't talk about it. The normal balance of any account is it is actually, oops, not that one. It's the side that increases the account. And I'll go down to the end there in a second. So the normal balance in any account, the normal balance being what's usually in that account. Okay. And I'll go down and show you in a second here. So whatever side increases it. Okay, down here. Well, let's take the easiest one here. So let's say you have an asset account. Let's say you have equipment. A normal balance is how much equipment do you have at the end. So that would be how much is on the books. Would it be a debit or credit? And again, we didn't talk about this. I don't think I put that. I'll put that one on the test. If I put it on the test, it'll be extra credit. But anyway, it's whatever side increases it. So for example, you could have, you know, let's say you have equipment. If there's anything in your equipment account, it's going to be a debit. It's going to be a plus. But you can't, at the end of a period, have negative equipment. You could have zero equipment, but you can't have negative equipment. You can't have negative, you know, inventory or anything like that. If you have any inventory, it's going to be a positive. If you have any equipment, it's going to be positive. Again, you could have zero, but you're not going to have it. So the normal balance is always going to be wherever the plus is. So same thing with liabilities. You could have zero liabilities, but you can't have negative liabilities. And same thing with equity. Then revenues and expenses, same way. The normal balance would be whatever the plus is. So expenses are going to be debits, revenues are going to be credits. We talked about that a little bit, but so that's what they call about the normal balance. The normal balance is at the end of a period, what would be in that account. And again, you can go down to zero, but you can't go negative, say, on assets or liabilities. So, yeah, the normal balance will be where. Oops, flew right past it. We didn't talk about that one. Should have, but I didn't. Okay, number 10, in recording an accounting transaction double entry system, which one of these is correct? And again, feel free to put it in the chat. And if you don't want others to see it, you can private chat it. So we have this, what they call a double entry system. Is, it's that your debits and credits have to equal. That's what they're talking about. Your equation won't balance unless you have at least two entries. It's called a double entry system. It could be more than two entries. It could be 3, 4, 5, 10 entries. But it's a double entry system that your debits have to equal your credits. So which one of those is probably the right answer?
C.
Yep. Okay, get my C in there. Yeah, and the difference between C and A is the number of accounts. You can have 3 accounts. So you could have 1 debit and 2 credits or vice versa. So the number of accounts don't have to equal, but the amount in them does. So, it is possible to have 3 accounts or 4 accounts, whatever it is, but the debits have to equal the credits. So the amounts must equal. So this is, we'll make that, yeah. So the amount of debits must equal the amount of. Okay. When a company has performed a service but not yet received a payment, okay, so we did what we were supposed to do. We don't have any cash yet. They didn't give us cash. So which journal entry are we going to do? You know what? You could actually figure this one out just looking at the service revenue. Revenues are always what? Revenues are always
Credits.
Yep. So revenues are always credits. Okay, so which one is it?
Would it be A?
Yeah, it's the only one that has revenue as a credit. Now, you could also talk about the debit, the accounts receivable. They owe us, they haven't paid us yet. That's an accounts receivable. That's an asset going up. If you go down to the here, accounts receivable, it's an asset. It's going up. Yeah, but for that one, if you just know that, or just look up that revenues are always credits. There's only one on there that has revenues and credit. Okay, I gotta move down here. When a company receives a utility bill, but it will not pay it right away, it should. Okay, expenses are always debits. So, these are the 2 that are in the running. This one, you don't, when you get the bill, you record it. This one, credit utility expense, this would only be if they sent you a check, and it wouldn't be on that. That wouldn't be it. So we're talking about A or B. Debits. So expenses are always debits. So these are the 2 that are in the running. The question is, which one is correct? A or B?
B.
Yep. Yeah, it's when we owe them. Accounts receivable is when someone owes us. So so the debit utility expense, that was correct in A also. But we're going to also have accounts payable, credit accounts payable. Accounts payable is going to go up. You can go look at accounts payable and then see that it's going to go up with a credit. This would be accounts receivable. This is if someone owes us. So that wouldn't be and then they're not going to owe us, and that would be decreasing it anyways. Okay, 13 is a tricky one. Can we receive money in advance? So this is when someone gives us money before we do anything. So they send us the money is cash. So let's go down here. Is cash going up or down?
Would it be C?
I don't know. Yes, it would be C. Debit cash is going up. So cash is an asset, it's going up. Unearned revenue, unearned service revenue. What kind of an account is that? Do you remember? Talk a little bit about it, I think.
I believe it's under liabilities.
Yep. Yeah, it's a liability because if the revenue here can kind of throw people, but it's a liability because if we don't do what we're supposed to do, whatever they paid us in advance to do, we gotta give them their money back. So it's a liability until we do our part. Yeah. So unearned service revenue liability. So debit and credit. So if we go down here, get rid of all that. So we would have cash would go up. With the debit. Yeah. And under liabilities, so yeah, these on the same page, but under liabilities, we would have unearned revenue, in this case, unearned service revenue. And it will increase with a credit. In other words, we owe more now. Whatever they paid us, we owe more now. So, yeah. Okay, I'm going to get these on the next page so they're all together.
Professor, can I quickly see number 11? I just want to make sure I highlighted the right answer.
Mm-hmm.
All right, thank you.
You're welcome. Okay, and so this really beats up the debits and credits thing. And I think I might go ahead and print this one out. Let me print this page out. What is this, page 9? Oh, there we go. It's unfrozen. So we're going to go through as each one of these. We're going to go through and see whether it'll be a debit or a credit. And unfortunately, my printer is upstairs. So I got to grab that. I'll be right back. me do something for 1 second. I'm gonna kind of get this situated. Okay. And I think you can do a split screen, by the way. I think I think they call it side by side. I can't do it on my end because I'm the host, but I think you can. You know, have this up next to it. Okay. And basically, we look at each one of these and see what kind of account it is, and then whether it's debit or credit. So cash account increases. What kind of account is it? Hey. What kind of account is cash?
Debit.
It's an asset. It'll be a debit. Revenue is a revenue account. Debit or credit?
Would it be a credit?
Yep. Supplies account. What kind of account? It's an asset. That's right. It's an asset. So what? So supplies account decreased. So supplies is an asset. It decreased. You can also use that other one too. The page. Page is 7 maybe. So if supplies goes down, debit or credit?
Credit.
Yep. Accounts payable decreased. Accounts payable to liability. We owe money. It's going to go down with a liability. It's going to decrease with a
Debit.
debit. Prepaid rent. I think we talked about prepaid rent. It's an asset. It's when you pay rent ahead of time. And if it increased with a, so asset,
Debit.
debit. Bonds payable. Payables are liabilities. Oops. Increased. Oops. It increased. So it's a liability. It increased.
Debit. Or would it be a credit because it increased?
Yep, exactly. Yep, increase it'll be a credit. So this is when you owe people more. And by the way, when you hear about when someone says they'll credit your account, they're talking to you about from their point of view, and this is what they're talking about. It means that they owe you more money.
Yeah, that was something that I've always kind of like, I still kind of struggle with is like I know that like it's like two sides of the same coin. So like debit could be like means different from the giving end instead of the receiving. That's kind of where I struggle with sometimes.
Yeah, and it's exactly right. They're telling you from their point of view. So if the bank says we're crediting your account, that means they're increasing their liabilities. They owe you more money. From your point of view, it's a debit. You know, it's an asset going up. Yeah. So it is, you know, again, it's because of, you know, they're telling you from their point of view rather than your point of view. Okay. 20, the utilities expense account increased by 140. Expenses are always, unless there's an error or something, they're always going to be debits. So anytime you see expense, And it could be that there's an error, but expenses are always debits. Revenues increased. Revenues are always do we have a revenue already? Oops. We already had a revenue. Revenues are always credits. Equipment account decreased by 400. What kind of an account is equipment?
Asset.
Asset. And it's going down. So it will be a debit or credit.
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 Yep. Yep. It is going down. So unearned revenue. You just talked about this. What kind of account is it?
Revenue.
Not yet. Hopefully it will be in the future. But if it's unearned.
Liability, sorry.
Yeah. No. Eventually when we earn it, and we'll learn about this next chapter, we earn it, it'll become a regular revenue. But until we earn it, it's going to be a liability. You know, once we do the work, whatever it is we're supposed to do, it will turn into an asset. Okay, so it's a liability. It increased by 580, so that'd be a debit or credit.
Credit.
Yep. The liability increased. Expenses are always debits. They always go up. Whenever you see expense, they're always debits. Unless there's an error or something, they're always debits. I mean, you never want to say always, but I mean, it's okay. Let's go through these and make sure we got them all. Okay, so 14 is a debit. 15 is a credit. What kind of wacky numbering do I have here? That should be 16 instead of 21. Oopsie daisy. My new numbering system of 15, 21, 17 hasn't caught on, so we'll go back to the old stuffy method. Okay, so 14 is a debit, 15 is a credit. What should be 16 is a credit. 17 is a debit. 18 is a debit. 19 is a credit. 20 is a debit. 21, the real 21, is a credit. 22 is a credit. 23 is a credit. And 24 is a debit. Question on those? Okay. How much time do we have? Any questions? Oh man, I'm not going to put this many questions on the test, just so you know. About half as many of these, but we'll go through these. Okay. Purchase supplies with cash. The accounts we're going to use are, I'll do it up here. Our accounts are going to be what?
Supplies and cash.
Yep. Oops. And supplies is going
Up.
up. Cash is going down. So I'll let you guys, the first correct entry I hear, I'll put up. What's the journal entry be?
Supplies.
Yep.
And they're going to be debit of 200.
Yep. And cash. It's going down. And again, if you know one side of it, you know the other side too. These are not centered. This handout needs a little work. All right. Borrowed cash from a bank using a note payable. What accounts?
Notes payable and cash.
Let's do the tricky one first. Notes payable is going up or down?
Up.
Up. Good, good, good. And cash?
Up.
Oh, good. That's one of the tougher ones. So notes payable is going up. We owe more money now. We have this. We owe 8,000 more, but they gave us $8,000 cash. Okay, so cash is going up. So what's the journal entry going to be?
Notes payable.
Debit or credit?
Would it be a debit?
No, close. So it's going to be a liability, and it's going to go up. So it'll be the credit.
Makes sense.
Uh, 8,000. So we know the other side is going to be cash. So cash is an asset going up. So cash is an asset. It's going up. Debit.
Love with you. Hat club. It's in, guys.
Was that for me? I'm not sure. All right. Yeah. So the cash is going to go up with a debit. So these are both going up. They're both increasing. Asset side is increasing. The liability and equity side is increasing. Received the utility bill. 150. What account? It's space bar. It is space bar. Okay.
Would it be utilities expense?
Yep. And one other account.
Either cash or accounts payable.
The accounts payable, because it doesn't show that they paid. So unless they say paid, whatever, usually accounts payable. That's exactly right. Good news is, this is going up. So is this. Expenses are always debits.
Increasing.
Yep. They're always increasing, so they'll always be debits. So it's not, I shouldn't say always, but unless there's an error or something. So utility expense, they're always debits. So you kind of know the other side. If you get one side, you don't. And again, expenses are always debits. Oops. Oops. Even if I can't spell it, they're always those. Okay, and so this would be accounts payable. So liability going up. So if you look over here, that's a paper. Liability going up with a credit. Oh, employees for 1 week of wages.
Wages expense.
Yep. Yep, and at that point, we know the debits and credits because the expense is always going to be a debit. You know, for 1 week wages, either accounts payable or more likely the book would put wages payable. Some kind of liability is also going up. So we owe these people more money. We owe them $1,100. But the nice thing is, whenever you see that expense, debit. There's something kooky's going on. There's all of it. And wages payable. Liability going up. And again, you look on the sheet, liability going up, or the other sheet too has all the accounts listed out. And again, you know, the reason why we're doing these this way is this is just a very quick shorthand. Instead of writing out a paragraph of what happened, just take the two accounts you need and figure out whether they're debits or credits, and you go on. Okay, 29, used cash to purchase equipment. Which two accounts?
Cash and equipment.
Yep, exactly. Cash going up or down?
Down.
Down. And equipment is going
Increasing up.
yeah, we have more equipment, but now we have less cash, but we have more equipment. Okay, so these are both assets, right? So the question is, let's take the cash. Cash is an asset. It's going down with a credit. Cash, an asset going down. I'm getting some weird like radio signal through my speakers here. I hope you guys can't hear that. I'm not listening to the radio, I promise. At least not on purpose. And equipment is an asset going up, so it'll be the debit. Paid cash for a truck. It was kind of similar to the same we used here. You know, use cash purchase equipment. This is kind of the same one. Paid cash to purchase for a truck, 4,000. Same as the other one. Cash is going down. And equipment or truck, either one. Either one of those is fine. Is going up. You usually see it as equipment, but it's possible you have it in trucks or what, it really depends. There is no standardized account you have to call something. You can name accounts pretty much what they want. Equipment's probably the usual one, but it could be truck also. Okay.
I have a question.
Mm-hmm.
Can like the truck, because it doesn't really, I don't know, can it go under like also like any other expense, or it would go like with always with like equipment?
Always go with equipment. Now, next chapter, we're going to talk about depreciation expense if it, if the value of the truck goes down. But until it goes down in value, we're just going to leave it on the book, assuming that it's worth the same, as when we bought it. So, for instance, in this case, we bought it for $4,000. At least initially, it's still worth $4,000. So, it'll eventually, though, it will be expensed, but we'll do that over time for depreciation. But that'll be next chapter.
Okay.
You don't want to put it as expense initially, because expense means it will go on the income statement. You'll minus it right away. And here's the thing, we haven't talked about this. It's probably a good time to do it. Equipment is long-term, usually more than 1 year. And so you actually expense it as you use it. So, for example, let's say, let me just get journal entry. So, this equipment, let's say this truck is going to last for 5 years. Every year, you divide this by 5, and that's how much you would expense every year. So, you're going to expense only, that it's going to last for more than 1 year, so you spread the expense out for more than 1 year. Now, it is true, though, and what you're talking about is actually true in that, if you think about it, what do we spend money on? Expenses and assets. So money going out is one or the other of those two. The only difference in this case is that the asset's going to last for more than 1 year, but it's going to get expensed eventually. As time goes on and we use it up. Okay. Supplies are purchased on account. 31. What accounts are we going to use?
Supplies and accounts payable.
Yep. Supplies is going up. Accounts payable going up or down?
Up.
And supplies is another one. Initially, when we buy them, they're an asset, but as we use them, we're going to expense them as they go. As you use that. Okay, so supplies. Oops. Wait, no, that's right. Supplies is an asset going up. If we look at our sheet, assets going up. And accounts payable. This is the one that trips up mostly with the accounts payable going up, because inherently you think about being negative, but it just means that we owe more money. Perform services for cash. Hopefully easy enough. Cash is a plus. What's going to be the other journal entry?
Service revenue?
Yep. And it will be going up. And the nice thing about revenues is revenues are always credits. So if you run into a revenue, kind of like expense, but the account is going to be a credit. So any revenue oops. And cash an asset going up. But again, once you run into the revenue, you say yippee, because you know that that is always going to be a credit. So if you have a revenue, it's a credit. Purchase office equipment and credits. Let's do all those. It's kind of like this one, besides percent account. Don't be thrown by this term credit. It's a little bit different. What it means is that you bought it on account, basically. It doesn't mean the equipment is a credit. Okay, so we have office equipment. You just put equipment. So our office equipment is going up, and the liabilities are going up, right? Okay. So office equipment going up. Office equipment is an asset. It's increasing with a debit. And again, you just put equipment in. That's fine. I don't know if they still have it. Germany used to have a numbering system that you had to follow for their financial statements. So you could call the account anything you wanted, but the number was actually what, it was a little more exact, but you could call it whatever you wanted as long as the number was, so whatever it was. 1,000 account would be a cash account. 2,000 number would be accounts receivable, and so on and so forth. So that you had to use their numbering system. And again, you can call it whatever you wanted because the numbers were really what told you what kind of account it was. Okay, so this is accounts payable. That is a liability going up. So again, we owe more. We owe $1,400 more. So we have to put that on the books that we owe $1,400 more. How many do we have left here? Yeah. I'm gonna keep you guys late. Okay. Purchased equipment and land for $25,000 cash. I tell you what I'm gonna do, you guys. So I'm gonna give you guys a test. Next class will just be for tutoring. I've gone over the last couple of classes. So anyway, next class you won't have to tune in unless you want to for tutoring or to go over anything. But next class on today, Tuesday. So on Thursday, we'll only have class if you want to go over anything with the previous stuff. So, and you can also ask me questions on the exam too if you want to tune in. And I won't give you the answer, but I might be able to tell you how to find it. Okay, so we'll go a little over today, but we'll have earned a free day. Okay, so purchased equipment for land Purchased equipment and land for $25,000 cash. Okay, so what accounts are we going to use?
Cash, equipment, and land.
Yep. Okay, cash going up or down?
Down on both accounts.
Yep, down. And yeah, you can definitely put it for both those. Equipment going up or down?
Up.
Up. And land?
Up.
Up. Yeah, and you can you can just put those up, which I would probably do if it was for accounting. Oh, need more room. I'd probably go ahead and split them up. You can also put them together if you want. We'll put them in. I'll split them up for this one. The book will probably show them together. So equipment's an asset going up by 10,000. Cash is an asset going down. 10,000. Well, I want to talk about this one anyways. Land is an asset going up. 15,000. And again, you can put these two cash accounts together for a total of 25,000 if you wanted. That'd be fine. And that's the way the book would show it. I would encourage you to do it this way if you're, especially if you're an accounting major, because that way, if someone's looking for the land purchase and they're looking at the cash account, they'll say, "Where's the 15,000 for the land?" And you can come up with that number. It'll be listed in the cash. Whereas you lump them both together, you'll notice that there is no asset for 25,000. And unless you knew that those two were purchased together, it may not, click as what they are. But one of the reasons why we separate things out like this and say, well, who cares? They're assets. Why do we care what, land or equipment or whatever? Equipment usually depreciates over time. Land doesn't. The land underneath the building or whatever is not going to go away. So you don't depreciate land. The building might need to be torn down someday, but the land underneath it won't. So the land doesn't depreciate, whereas equipment or buildings like that usually does. So that's why we separate them out, is partly because later on, we have to know whether they're going to depreciate or not. Okay. 35, receive cash from a customer previously billed. A little bit of a tricky one. What accounts?
Would it be accounts receivable?
Yes. And what's the other one?
Cash.
Yep. Okay, let's take the easy one. Cash, is it going up or down?
Up.
Accounts receivable, the tricky one. Going up or down?
Up.
Well,
Down or
yeah, it's gonna go down because now they don't owe us anymore. They owed us 470, And now they don't notice that anymore. So our cash is going to go up. Cash asset increase with debit. I know you guys are probably kind of getting the hang of it. You know, assets go up with debits. They go down with credit. It's kind of like the opposite of what someone says they credit your account. You know, when someone says they're debiting your account, that means, or they're crediting your account, that means it's a debit to you. You know, from their point of view, it's true. Okay. And accounts receivable, they no longer owe us. So going down. So we'll come to stock for an investor for $10,000. What accounts?
Common stock.
Yeah. So common stock. So this is it's going up. We have more owners now. And what did they give us?
Cash.
Cash. It's possible they gave us something else, but unless they specifically say they gave us, you know, I mean, it's possible they give us land or something, but unless they tell you that, assume it's going to be cash. Okay, so cash is an asset going up. Again, we look at our chart, asset, cash going up, it's going to be a debit. You are probably getting familiar with cash going up with debit. The tricky one is common stock. And that's because it's an equity account. You don't use those too much. And it is also going up. We now have more owners. Either more owners or the same owners have more of an interest in the company. Okay. Received a cash advance from a customer for $360. This is a kooky one. I'll give the easy account. Cash is going up. Okay, what's the kooky account? So this is when a customer pays us ahead of time.
Would this be a liability?
It would be, yeah, absolutely. This is unearned
revenue.
Yep. Perfect. And even though it says unearned revenue, it is really not a revenue. It is a liability and it's going up. We owe them. If we don't do what we're supposed to do, we got to pay them back the $360. So that's why it's a liability. Until we've earned it, we owe them that money. So they gave us the money ahead of time. And unearned revenue it's not really a revenue. Liability going up. Now, here's the thing about making a journal entry. Even if you mistakenly thought it was a revenue, revenues are always credits. So usually you're okay even if you make the. I keep getting error messages on my screen saying that I have to close this window. I ignore it. Do you guys get any error messages on what you're seeing for my screen?
Yeah, we see it.
Do you guys get to see this? The square thing?
Yeah, please move something from the shared application.
There's nothing there. Please move this window. But there's, there's nothing there. You know, and then it just fades away. Okay. Oh, here it comes back. Yeah, weird. And I mean, there's nothing. Oh, you know what it is? It's the drop down from the same. It's actually the Zoom drop down. Huh. It's counting the Zoom drop down as all right. Well, that's enough fun. A little bit annoying that it's the old program. Okay, issue common stock for cash. We just had this one. Issue just means sold. That's right. We put this one in. So issue just means sold common stock. So this will be the same as the other we had. Common stock cash. Yep. Cash going up. Okay, so cash is the asset. Again, this is one we just had a couple. It's for the same amount too. No, it's not. All right, 8,000. Look at that rustling you hear. That's a little dog upstairs. I'll look up, see how to get rid of that thing. It's so odd. Anyway. Billed customers for services delivered. This one I should have had earlier probably. This is a normal entry you'll do all the time. What accounts are we going to use for this one?
Would it be service revenues and accounts receivable?
Yeah, perfect. So service revenue is going up and accounts receivable is also going up. Nice thing about revenue, is a credit. So whenever you run into a revenue, you say yippee. You don't say it out loud because people think you're nutty, but you say yippee to yourself, and then you put in a credit. And the other side would have to be the accounts receivable. And accounts receivable is an asset. Going up. Okay, I think that's it, right? Okay. Any question on that? Okay, so I'm over again by 15. So next class, you do not have to show up unless you want to. If you want to, I'll be online at the same time, 11 o'clock. If you have any questions, anything you want to go over, if you have any questions on the exam, I won't answer, I won't give you the answer, but I'll tell you, maybe the direction to go to find the answer. So next class, if you don't need to, you don't have to show up. But I will be there if you do. So no new material though on Thursday. So no new material, nothing new on Thursday.
Are we turning in this practice exam?
Yes, we'll put it that. That is a computer. I just wanted to show you guys what a computer looks like if you haven't seen one. Now, so I'll put the practice exam on. Also turn in the problem, if you haven't already, the 2-4A and 2-4B. Turn those in. And I will be sending out the exams later on today. It probably won't be till later, but the exam will be out and you'll have a week to turn them in. They'll be due next Tuesday at midnight. Even if you don't get them, I'll take them late, but that's when I'll put the grades up after that. They'll be included in your grade today, I should say. Any questions? Okay, so the practice exam I'll put in assignments, and I will be sending out the exams shortly. I want to look over it and make sure that I don't have the numbering correct if nothing else before I send them out. So expect those later on today. Certainly by say 10 o'clock tonight, but hopefully before then I should get them out. Any questions? Maybe? Okay, and no class on Thursday unless you want to ask questions about stuff we've already covered. No new material on Thursday. And I'll put that in the email also. But, now, again, if you have questions about stuff, by all means, Thursday. But if you don't, then I will see you guys in a week. Any questions? I apologize for going over, but it's better than splitting it up and then finishing it next week or next class and piecemeal and all that kind of stuff. All right. Any questions? All right. Well, go enjoy the snow. Go dig out your car or whatever you do. But anyway, I will talk to you guys next. Well, I'll be here on Thursday. Otherwise, I'll see you guys on for new material next Tuesday. Okay.
Thank you. Have a good one.
Thank you, Professor. Have a good one.
Okay.
Thank you.
Thank you.
Thanks.